Should you invest in the stock market or invest in the real estate? The question is not easy to answer. It depends on what is your personal situation, what is your risk appetite, what is your mindset, what are you actually investing in for, what is your ultimate goal. There are so many variables. Let's dive directly into the pros and cons. I've got 11 pros and cons for each of the asset classes. Let's talk about them one by one. So if you talk about the first step to invest in one of the asset classes, so let's say if you talk about investing in the real estate, you will get penalized, or I would say you will get slapped with the cost of acquisition. The cost of acquisition, if you talk about Dubai, you will face around 5 to 7% of cost of acquisition. I'm talking about normal built up real estate. If you go for the off plan real estate, you might not have any cost of acquisition, but of course this is embedded in the price itself. But if you talk about a built up let's say real estate in Dubai, you will get anywhere between, let's say, 5 to 7 to 8% sometimes of the cost of acquisition, which will include your payment to the real estate agent, your payment of DLD fee, your payment of different other fees. So this will amount to around 7%. But in case of stocks, it might not be even more than 0.5% of your total investment amount. Understand that you will have a lot of upfront cost to be paid for your property, or let's say if you talk about the stock, it will not be very high. And at the same time, if your property is appreciated, let's say 10% in next 2 years, you have to compensate the amount that you've already paid upfront, let's say 7%. So you have to make sure that you are, let's say, if you're disposing the property and you think that you have got 10% of return already, you must calculate the 7% that you have already paid at the time of property acquisition. While for the stock, let's say if the stock has increased its value in 10%, you probably would be pocketing the full 10% in if you're not getting any capital gains tax, which in case you are in Dubai, you will not be slapped with any kind of capital gains tax. So you have to think about these costs. Then comes the second point about volatility. So if you talk about the stocks, there is a huge volatility involved when you're investing in stock market, because one day the stock market can go up 10%, the other day it can go down 12%. So there is a lot of panic situation sometimes happening in the stock market, but at the same time, in the longer run, it will give you some kind of returns that you expect. And historically speaking, it has been better than real estate. But again, it depends on your time horizon. It depends on a lot of factors, where you've invested, what kind of stocks you've invested. Either you've been doing index investing, or you've been doing individual stocks investing, or you let's say your individual stocks, if they have done well or not done well, your properties have done well or not. But in general, volatility is higher in the stock market. While comparing this to the real estate market, the volatility, you will not find it immediately in 1 day or 2 day or even a week. This volatility comes for the real estate in longer period of time, let's say a month or 2 months, and in that time you might not be seeing the graphs. So you will not have any panic attacks if the property prices are down. So someone who has the mindset of keeping a track of their the portfolio daily, the stock market might not do well for them. Similarly, the third point we can see is about the constant investing opportunity. So in the case of stock market, if I want to have a systematic investment plan, if I want to invest in stock market on monthly basis, let's say if I'm getting salary and I'm getting some surplus amount that I want to invest every month, I can do it very easily through the stock market. But this I cannot do it in the real estate, because if a house is costing me, let's say in Dubai, 1 million dirham, I at least have to go to bank to get, let's say, 20%, 25% as down payment, and then only I will be able to buy it. I cannot do this every month. I cannot buy even on mortgage. I cannot buy a property every month. So this is very difficult to maintain as a dollar cost averaging investment strategy. While in stock market, you can do even with 100 dirhams. If you talk about dollars, you can do it $50, $100, whatever the amount is, because you can do fractional ownership of the stocks even. So if the stock of Apple is costing you, let's say, $200, you can easily invest in the stock for even $10, apart from whatever fee your broker is charging, normally $1 whatever the amount is being charged. Let's say if I talk about Baraka or Sarva, the platforms that I invest through, they charge for anything less than $400, they charge almost $1 as fee. So this you need to keep in mind. Apart from that, you can invest $10, $15, $50, $200, whatever the amount you want to invest, you can easily invest through these platforms. And if you want to open the account in these platforms, it's very easy. You can use my referral code and you will get $25 or $50, whatever the amount they will mention while you open the account. Then the ease of diversification is a very important point that you need to understand, that if you invest in real estate, it is confined to one of the geography. So if I'm from Pakistan and if I invest in Pakistan, let's say a property there, there is a huge amount of investment that I'm doing in one geography, in one country, and in one property. But let's say if I talk about stocks, I can diversify my risk, I can diversify my investment through the stock market. I can diversify, even if I want to invest in Pakistan through the US stock markets ETF, I can do that. If I want to invest in the UAE, I can do through stock market. If I want to invest in individual companies of the US, I can do that. So I can diversify my investments throughout geography through the stock market, while it's very difficult to do a diversification in real estate because your investments are in a specific country. If you want to diversify, you might have to buy different properties in different countries at different timings, which is very, very difficult for a normal person. So stock market is good in diversification. And then here comes the part where most people prefer the real estate, because you can feel the property, you can touch the walls, you can touch the floor, you can walk on your property. It's tangibility that is important. Your real estate is tangible, while the stock market is not tangible. You cannot touch your company, what you're investing in. You might invest in one of the, let's say if I want to invest in Apple's stock, I might have to go all the way to the US and touch their walls and then realize, okay, this is the company that I have invested in. But in terms of real estate, you might just go and touch your doors, live in there, give this property on rent, and then feel it. So tangibility is something which is real in the investing space while you are investing in the real estate, while that is not the case with the stock market. Now, there is one misconcept that I want to touch upon is cash flow. People think that while you're investing in the real estate, you will get cash flow, while in the stocks you will only be able to make money when those stocks appreciate in value. While this is not true, because cash flow is there either in the stock market or let's say in the real estate market. Real estate, you can get the cash flow through the rental income. Whenever you invest in the real estate, you can get some kind of tangible asset, and then you can rent it out as well. Whatever the rate of return is, you will get some kind of rent from it. At the same time, if you invest in dividend paying stocks, they will be paying you dividend quarterly, sometimes monthly as well, and those amount can be sometimes equal to your rental as well. So I can equate dividends as rental. So dividends can go high, can go low, or sometimes they won't give you, the company is not doing well, then they will not be able to pay you dividends. Or let's say that sometimes company want to invest the same amount in their growth, so they might not be able to pay you dividend. But dividend is somewhat equal to rental income that you're getting from your properties. Now another point is about leverage. The leverage is very high, normally seen in properties, because if you go buy a property, let's say in Dubai, you will get the property. If you want to mortgage it from the bank, the bank will ask you to pay down payment of 20%, and then you will be able to get 80% out of the bank's pocket, and bank will be able to finance it. So this is called leveraging, that you have a small amount and then you leverage on that small amount and you invest from that amount. In the stock market, it is not as evident or as prevalent, or at least what I myself not do for the stock market. Otherwise, people do leverage, people do trading leverage, people do all kind of leverage in the stock market as well. But it's very difficult. It's very expensive. Leveraging the properties is cheaper because you will get cheaper loans, cheaper interest rates if you're buying a property. But if you ask the bank, if you want to invest in, let's say, a real estate and you want a loan, they will probably not give you the loan, or they will give you the loan on very high let's say a high interest rate. But if you go to them and ask them, if I want to have a personal loan for my own needs, they might give you personal loan, but you will not be able to tell them that you are applying for let's say leverage on the stocks. So leveraging on and there is another kind of leverage. If you're investing in the stock market, many companies that you invest in have debt on their balance sheet as well. So indirectly you are getting leveraged. But the kind of leverage that you do in the property market or real estate is not evident in the stock market. So all at least the regular people don't do that kind of leverage. So leverage is something which is important, and it's available in the real estate. But again, you have to think about leverage as a double-edged sword, because sometimes if you do the leverage, it is highly likely that the interest rates can go up. Your tenant will not be there. In any case, you have to pay for that amount of investments that you have done, or whatever the case is. So leverage is always a double-edged sword. It can give you enormous returns, or it can be a source of tension, because then recently, once the interest rates start going up, I have seen people who were having their payments towards their properties at, let's say, 7,000 dirhams. Payment now has gone up to 10,000 dirhams just because the interest rates has gone up. So and then if, let's say, a property value goes down, you are still locked into that leverage, and you still are bound to give the same amount that you were supposed to give. And if you want to sell that property, you will definitely be selling it on a loss. So apart from the interest, and also there is another point that once you take the loan from the bank, the interests are always charged upfront. So if you go for a 25 years mortgage for one of your property, and you go for, let's say, 5 years, and down the line 5 years, if you go back to the bank and say that, okay, I'm gonna sell my property because it's already giving me X amount of return, please just, I want to close this loan, then you will come to know that you've been paying for 5 years, and the most amount that you've paid already is towards the interest, not towards the principal. So all these scenarios has to be seen once you go for the leverage. Now, there is another point that people say, that investments in properties or investment in the stocks are really active, because you don't have to worry about how your portfolio is working. You've just invested the amount, you will get the rental frequently. Similarly, the dividends you frequently. But I would say the active income and the passive income is a subjective topic. And if you talk about properties, I won't say that it's a passive income, because even if you are giving your property on a long-term basis, you might have tenant coming up to you that, okay, there is some fault in, let's say, your air conditioning system, or let's say there is noise in the surrounding neighborhood, please go and check this out. So it somehow is not passive completely. You have to be involved. Either it's an Airbnb business or it's a long-term rental. So I won't say that it's completely passive. I've seen my own properties getting different issues with the tenants as well. So I have to involve somehow in this process. In case you go for a completely passive route for the properties, there is a platform called Smart Crowd here in Dubai that can give you an option to invest in the properties, and still you don't have to worry about what is going on with the tenants. If you want to invest in that platform, you can use my referral link in the description below for investing in the Smart Crowd. You will get 250 dirhams of referral bonus as well. But again, if you use those kind of platforms which give peace of mind, the returns would be definitely lower than what you will invest through your own money. Similarly, for the stocks, if you talk about stock market, that can be completely passive. If you, let's say, think about only investing in index fund, then it's a no-brainer that you just invest every month a fixed amount of money, and you keep on doing it for the next 20 years, 30 years, whatever the time frame is. You don't have to worry about a lot of things. But if you want to invest in the individual stocks, then definitely you have to work out. You have to see the balance sheet of those companies, or working of those companies, how those companies are working. So it again becomes slightly active. The next point is about the friction of investing. Once you are investing in the real estate, then there is a huge friction involved. Let's say if I am in the same geography that I'm going to buy the property in, it's easier, but still I have to see the property, physically go there and survey a lot of property, talk to the real estate agents, see a lot of factors that I have to go through. And if it's overseas, then it's on a different level. I cannot go every time to the property and see and shortlist the properties myself if it's overseas. But in terms of stocks, the friction is very low. You can just be at your desk. You can use your laptop, and easily you can see which property or which stocks you want to invest in. You can see all their financials. You don't have to see, let's say if I'm investing in Apple stocks, I don't have to go to Apple's headquarter to see how it looks like, how it is. I can easily sit on my desktop and buy the stocks after I research on the company. Similarly, the cross investing is possible. There is a misconcept that if you are investing in the real estate, you have to only go for the investing in the real estate through the physical ownership. It is possible, as I said before, that there are opportunities, there are platforms that allow you to invest in the fractional ownership of the real estate. Smart Crowd is one of them. And apart from that, you can also invest through REITs. So real estate investment trusts are options that you can invest through the stock market directly into the real estate, into the physical real estate, that can give you monthly rental returns as well. The reality income is one of the stock I invest in. I won't recommend all of whatever. By the way, in this video I talk about is not an investment advice. It's only what I am doing, and my knowledge, whatever I have, I am trying to deliver on my this YouTube channel. But if you want to invest in, let's say, US stock, US property market sitting in the UAE, you can easily go and buy the stock of reality income after looking all the financials. Of course, this is a REIT, and they invest in commercial real estate of US as well as different countries around the world. So they have good returns as well, almost 5% as of now that I'm talking about on yearly basis. It gives monthly returns. There are options to invest in real estate through the stock market, but from the real estate itself, it's not possible to invest in the stock. If you want to buy a real estate, it's the real estate, it's not the stock. So it's cross investing is possible through the stocks, both in stocks as well as real estate, but not possible, let's say, through real estate. You cannot invest in any of the stocks. Now, the last point is about the friction in divesting. So let's say if you want to sell off or dispose of your investments, what can happen, or what are the pros and cons of having to having to divest from the stocks or the real estate? So as I said before, it's difficult to, let's say if you're not in the same geography, it's very difficult to go and spend extra to dispose of one property. Let's say if I have a property in Dubai and I'm living in the UK, and if I want to, let's say, dispose of that property, I probably have to fly or have to go through a lot of friction to dispose of that property. So this is something that needs to be understood, because a lot of people, while living in one of the place, not thinking that they might move and they might have to come back to sell the property. I've done in my home country as well. I'm from Pakistan, so I've already invested a lot of properties back home. And let's say if I want to dispose of now, I have to plan my trip just for let's say divesting my portfolio from there. if that is the case, the extra cost of my traveling and these things, the logistics comes in. While in the stock market, I can easily, being a Pakistani citizen, I can easily invest in the stock market. I can easily divest from there and bring the funds as well, if I want, to Dubai. Or if I want to invest in the US market, I can easily invest while sitting in Dubai, in Dubai. And even if I move, let's say later on, to any other country, my investments are still based on those platforms, and I can easily divest from there. So these things needs to be kept under consideration whenever somebody is investing and thinking about real estate versus stock market. Both the investment vehicles have pros and cons, and it's up to a person, whoever is investing into these both the vehicles. It's up to him or her, how do they think about it. Both the asset classes are good. Both the asset classes have given phenomenal returns, both beaten inflation over the long period of time. So it's not about investing in which of those categories or which of those if these vehicles. It's only about your own convenience and where exactly you think you will be in your near future. I hope you like the video. I have added on the end screen here a couple of videos that I've recently did. Actually, those are the podcasts I've recently did. One of the podcasts was related to my passive income, how I have evolved my passive income. Here's the link to the video I've done with my friend Adnan. There is another podcast that we've done about my active income, about my YouTube. Here's the link to the video. I hope you like this video, and let me know your feedback, please. Thank you very much.